So I think the best way to start this off would be if you guys could all give a brief introduction, 60 seconds, give some background on yourself and what you've done previously and where you're at now.
Sure, I'll kick it off. Is this on? Thank you. Hey everyone, my name is Mira Oak. Coming up from the Bay Area today, and I'm a partner at Alumni Ventures, but prior to Venture, I worked at Yale University for a long time. I was on the endowment finance side for a stretch, and then moved into strategy and operations, which could mean literally anything. But for me, it meant doing a lot of M&A for the university, which is unique, and a lot of broad-based tech implementation. So I helped shift our cloud infrastructure from Oracle to Workday. I'm sure dating myself even by saying that. A lot of business intelligence tooling, and then worked at a venture studio in New York, helped incubate businesses there, and fell in love with early stage and joined Alumni Ventures shortly thereafter. It's great to be here.
Yeah, I think I can follow. Yeah, hi everyone. I come from fly from San Francisco as well. I'm now a partner at Global Millennium Capital. I know it's a little bit mouthful. We are a very new firm. We kicked off this firm last February with 30 million. And fortunately, we raised another excess few hundred million, so we are being more active investing early stage this year. A little bit about me. I actually was tech background, and I spent very limited time right after my master degree at Duke at Microsoft. But I when I was in internship, but I decided to quit because it's so boring for me. And lucky I raised about I was twice founders. I raised 3 million when I was doing my first social apps consumer tech, but it failed gracefully. And my second startup is more because at that time I just decided to make money, so I was more focusing on revenue, so doing enterprise level stuff computer vision and machine learning solutions. Yeah, that's why I fall in love with startup lives. I think I would never go back to big tech, even if I have a tech background. Yeah. So thank you for having me, Pablo, and also thank you for remember me Chris. I met Chris I know Chris. So I met Chris last year. Yeah. Thank you for having me. Yeah.
Very cool. I am Vivek Latsaria. I am one of the managing directors at PSL. I lead their venture fund. I'm an accidental VC. I started my career as a founder. I built two companies. The first one was a gaming company that we ended up selling to GameStop, following which I started a second business to buy and sell equities in private companies. So a lot like a stock exchange, but for private companies. We were acquired by the NASDAQ, and that's when I started investing. Uh, Spent most of my investing career in San Francisco. I lived there for the last 12, 13 years before moving up to Seattle very, very recently. So this topic of SFM in Seattle is very near and dear to me, and excited to be here.
I think I heard about your old company on Wall Street Bets a couple years ago.
I spent 0 days at GameStop, and unfortunately or fortunately did not own any stock. So also took all cash, no stock, which was just
All right, cool. So can you guys give an overview of the current fund that you're working at? What is the thesis? What are you focused on? Check size, stage, all this. Give us the rundown.
Okay, I think when we start as a major ranging fund, no, I think very limited people know us. We focus on early stage from pre-seed, C, and Series A, and this year we might invest a little bit in Series B as well. So our check is mostly AI, of course, and then mostly enterprise B2B SaaS. And also blockchain is another big focus, typically about decentralized finance. But I would like to mention that we pretty flexible because as a new fund, I think our nature is I was able to close a deal within 2 weeks. I met founders in December or something, and I literally closed the deals during Christmas time when I fly to Miami actually. So I didn't get my holidays at all. We are pretty flexible and we can act very quickly, swiftly, and I think that's about it. Yeah.
It's challenging the Seattle VCs to move quickly. Right?
Yeah, Alumni Ventures is pretty unique in the venture ecosystem in that we source our capital from individual accredited investors as opposed to endowments and pension funds. And this model sort of started with, in the name, with alumni. It was started by fostering sort of connectivity amongst individuals who have a shared history, and universities were a great place to start. So we started, with some larger research institutions on the East Coast and just replicated that model. But today we, have no sort of I guess allegiance with any specific university. We invest in all founders, regardless of where they went to school or didn't go to school, and we have over $1 billion in assets under management today. We're exclusively co-investors, and we invest pre-seed through pre-IPO. I focus on pre-seed and seed, and we're generalists, but my tendency is to focus on infrastructure and vertical equity.
And you guys have a presence at UW yet?
Actually, no, but there's already great funds that are sort of fostering, connections at UW.
Right.
So it's been great. Yeah, exactly.
Stay away from University of Florida.
Yeah.
We are investing out of our second fund, which is a $100 million fund. Nothing is too early for us. We will invest in anything from formation stage, pre-seed, and seed, and typically tap out around then. We prefer to lead investing, very very conviction driven. We write checks anywhere up to $4-5 million or so for an initial check, and reserve about that much for follow-ons in all our companies. We have an interesting business because we have two businesses. We also have a startup studio where we start companies in-house, so incubate, just like what you were probably doing in New York earlier, and have certainly worked a lot with alumni, an incredible platform, and it's such a powerful network of all the LPs who stand up to help the portfolio.
Awesome. Yeah, and the founders of Pioneer Square Labs, I mean, some of the most reputable investors and entrepreneurs in Seattle. Former co-founder of Rover and one of the first managing directors of Atrona, so they're an incredible group. And then I'll quickly answer. I talked about what our firm focuses on, but as far as check size, we do 15 to 100K, and really focusing on the really early stage, so like pre-seed, all the way up to seed, and yeah, all of the that stuff. Cool. So when you guys are in your first introductory pitching with an entrepreneur, what are the things that you're looking out for? What are maybe some red, yellow flags, and then also what are some of the things that you're looking for that will get you to have more conviction in the company?
Okay, I think I would start because I have twice founders the guy self and experience. So first thing I would like to see, because I get a lot of cold things every day, and I proactively reach out to founders myself. So one thing I try to see is what kind of problem you're solving, and also whether you're using now the language models, AI is very hard, and blockchain AI agent plus Web3 is very hard, but whatever the ideas you're talking about, I just really want to actually talk to the problem you're solving, and if you can introduce one detailed examples of your client's feedback for the solution you're providing, that will help a lot for me. So I think because I have some tech background, so if you want to discuss technology, I can do that as well. Yeah, I think I just want to add up some details I forget to mention. Our check size averagely at 250K to 1 mil. And one about unique strengths is because naturally our fund come from Middle East countries, so we have a lot of resources like Dubai, Middle East, and Qatar, and also I have been 6 years founders in Asian place, so I have a lot of resources there. If you want to go to market or local relationship, I can help with as well. So yeah, thanks for the topic. I really like to learn this about the solutions instead of the technology itself. The first would be the solution to the problem. Second would be how you solve it, about the technology stack. Yeah.
I'll go real quick. I feel like the most important thing for us is the founder and whether or not they are just the most impatient person. If you are not, if there isn't that sense of urgency, I feel like for us that's not a right fit. Just need to see that will not be stopped, can't stop, won't stop energy from the founder, and I think that's probably the most important thing. Followed by a level of scrappiness. I think to us, one of the most important things being a founder is not being great at any one thing, but being really, really good at being able to pick up any function that the business really needs. And I think that requires a level of scrappiness and resourcefulness that I want to see from a founder. And I think it can be visible in a story and how they arrived at different parts uh, of the company. I think you can see some of those things. And finally, I think as it relates to the business itself, just seeing something that is a unique insight. Like, what is it that the founder has really figured out or learned that's got them to this point of saying, "I'm going to do the stupidest thing one can do and start a company." And so there has to be this really sharp insight behind it, and trying to figure out what that is.
Yeah, I just want to build on the impatience bit because that's actually something I really love to look for. And the thing that I really appreciate is just seeing hunger because it means that you're willing to, I mean, not only can you sell to an investor, but that means you can sell to your employees, your customers, just your ecosystem broadly. So I think showing that enthusiasm and yeah, hunger is just really important for all stakeholders. I think I guess in terms of flags, since you asked, Pablo, I really appreciate just dedicating the time to a conversation. So really I don't really enjoy getting pitched at for 30 minutes. I mean, I really appreciate sort of having the chance to look at a deck in advance and then having a conversation, using the 30 minutes to actually engage on, the meat of the business. And it's the best ground for a great partnership moving forward. So it's just how I like to spend time.
I love that. I'm glad you touched on that because, I mean, I think that's like an experience that I think every VC has probably had where you hop on a call or have a meeting and then somebody just like word vomits for 30 minutes and then you're like done with the meeting and you feel drained and you feel like you didn't really get to know, like, you didn't really get to build a relationship with somebody. It was like one-sided. So, we're going to have time for questions from the audience, so start thinking about what you would like to ask our wonderful panel. But I'd love to know, if each of you could highlight one of your, favorite or one of your, maybe you don't have favorites, but like one investment that you've made that you feel very optimistic about. And then explain, why you invested in that company.
There are no favorites 'cause we love all of our children. Yeah, I mean, I guess one company that came to mind since you mentioned GameStop, I was thinking about gaming companies, is a company called Altera that we invested in about a year ago. And what this company is doing is essentially we're developing the prefrontal cortex of autonomous agents. So bringing social emotional intelligence to an agent network. I could go very much in the weeds on that, but what I really appreciate about the team is the team was actually spun out of MIT's MetaConscious Lab, and so it was a PI that was based there, Robert Yang, and he founded the company. He recruited a really strong Google operator, so he really married the academic horsepower and the operational horsepower in one founding team. And the focus of the company is really rooted in research, which means that, at the end of the day, the product that they're producing is sort of has been accepted by, I'd argue, the toughest critics. So really excited about that company. We invested in their pre-seed and they raised a very large seed after that and are on the hunt for an A. So yeah, excited about that one.
I'd say my favorite investment has to be my first investment in Databricks. That's going to fund my retirement and all of that one that I've done it. And so I think that there as a result is probably unequivocally a favorite one. The one I'm most excited about is one that I think mirrors that investment a lot in its earlier days. It's a company that we spun out most recently out of Microsoft. It was an open source project within Microsoft. And the open source metrics were just through the roof. 300,000 developers using it on a monthly basis, very similar to a lot of what Spark looked like in its early phase. And this open source framework is essentially a framework to build multi-agent systems. So how do you bring multiple different AI systems together to build a solution eventually? The premise being that those systems are better performant than single agent systems. The challenge ahead is obviously trying to figure out how we monetize and how we build a business while not alienating the open source community. So that's going to be an exciting challenge ahead for us. But it's one of those founders that is just relentless, unstoppable. Has built this community. She's just been a powerhouse in this community as a leader of this community. Comes similarly, very research rooted. They authored multiple papers that led to the open source project and something that we're really excited about. The project is called AutoGen.
Are they still raising?
They are not. They're no. We're not raising them.
I heard Vivek was going to hand out Databricks stock to everybody who's trying to do that too.
Okay, I think I won't say it's my favorite, but I think that deals that investment is really what I learned most in my like transition from founder to investing careers. The company is called Perfect Diaries. It's now a Nasdaq company. I was in a team. We invest in like post valuation about. If I remember correctly, it's about 100 millions. So it's kind of Series A or something. In 2020 or something. I don't remember exactly, but after we invest in that deals, like one like very smart strategy and which benefit me a lot as a founder myself at the point, is that very successful company and product doesn't need a lot of sales channels. So at that point, Perfect Diary is a like makeup e-commerce platform. So now, at that point, they have like a 10% of like exposure in red, like the platform that TikTok flows into, like the right book, right? And after we invest in that, like then we would like to like focus in growth. Like of course they have already some product marketing fit at that point, but how at that point we had very like fierce discussion. I was on their meetings. They had very fierce discussion about should we like go to like other platform or how do we like spend a budget to become like ideal company to dominate somehow the market. So there's two voices. One is go money channel. One is like directly stick to like the red. So the result I can tell you is like they stick to the red and they dominate about 50% of every keywords you can think about related to makeup. And at that point, every like customer like Perfect Diary is targeted and open the brand and then they can see product. So that's one lesson I learned. I think it's valuable for my career. Is like a very successful product. Once you find a BNF, you don't have to have like omni channels. And one of my mentors, he said he hate omni channels. Say, in terms of marketing, he just really he actually suggests like a very successful even Nasdaq company only need at most two channels. They do very good. So yeah, that can be my favorite like deals that I learn a lot. Yeah.
All right. Two more questions on my end, and we'll take a few from the crowd. What is valuation when you're looking at potential investment for you guys?
Uh, well, I think it's obviously important to everyone. It's pretty important to us as well. But the way I think to me it's more important how we think about valuation is very. It's not more. We think about valuation more from the standpoint of option valuing the business. Uh, all VCs are doing is buying an option in the future success of the company. And I think that allows us to think about valuing it much more differently than applying a DCF lens. Obviously, no one is doing a DCF of any kind, but applying that kind of lens, I think, is restrictive in thinking about how you might think about a business, especially at early stage. So important to us, but at the end of the day, it's option pricing, and so it allows us to think about paying up for something that we're really, really excited about.
I think valuation. I just want to add up. I think it's objective. Like I think it's measures. When you investing, you try to get very good ROI as a venture investing guys. But I think I would still come for like how convinced I'm trying to be with this because our vision is like to be with the founder from zero to IPO. Um, yeah, so valuation is just one metric. It's not that important. Um, Comparing to like other metrics, I think I would, for example, this like during Christmas, I collected deals, we give them the highest valuation that like we suggest. We negotiate. We give the highest one, but we fight that for the right. We want to be with a deal like in the like most like later stage. So I think once we are convinced about this, like the team, the vision. So I just want to stay with the team, support with the team, and I can give you a high. I actually did give the highest valuation. So yeah, that's my take.
Yeah, I think I totally agree. And having it invested in pre-seed and seed, I think you are thinking about just like the full sort of roadmap of the company. I think the one aspect where market does come into play is some of these, I guess, hype cycles that we've seen in the past few years. I mean, fintech a few years ago, crypto, and now AI. So I think in some ways you kind of have to, evaluate that, consider valuation, but it's also within the context of what's happening in the market broadly. So that's where it kind of breaks the rubric sometimes.
Awesome. And last question for me is, what is one piece of advice that you guys would all give to first-time founders that are trying to raise capital right now?
Okay, I think I will go first. What I'm trying to think that this question is like any advice I would give like 7 years myself. I think what just people would say just try to build things, right? It's very popular now in San Francisco, Silicon Valley. But I think it's also important to understand from the client's perspective. Typically for a tech founders, because I was a tech founder myself, I think sometimes I just fall into like fantasy about how good my technology, my product is, and ignoring like the real client's feedback. And sometimes when you build, you think it's very like perfect, but if you don't get this product early exposure to your real clients sooner enough, sometimes you find yourself waste a lot of time building things that you find is very good, but the client doesn't actually necessarily want. Yeah, that would be my first advice.
I think not being afraid to sort of pivot early and quickly is something I would, at least that's something I've been having a lot of conversations with founders, with my own founders recently. Is and it doesn't have to be a dramatic pivot. It can just be slight pivots. And the earlier and the more swiftly that you do that, make that action, you're setting yourself up for success because you're not wasting time, going down a path that will lead you, nowhere. So I think, and I say that easily, but it's very hard to do. So you just sort of, I guess, weighing the cost benefit of making those decisions. But if you can effectively, I think it can be really rewarding.
I'd say focus on the intrinsic a lot and be really true to yourself in trying to figure out what is your why behind this company. The path is going to be, I think if there's any certainty, is that the path is going to be incredibly hard and you will want to quit at many, many times. And I think the only thing that pushes you through is if the intrinsic why is true and real. And it's really easy to drink your own Kool-Aid, believe your own stories, that you're telling everyone else. But I think you have to find that something that levels you, something that you can be true to yourself. So focus on that. Don't start something if you don't have that real intrinsic why.
Adding on to that, just one thing I've learned about startups is that nothing ever goes according to plan. Everything takes longer than you think it will, and costs more than you think it will too. So yeah, I think that's super important. All right, we're gonna take some audience questions. If anybody would like to start, we have one over here. Got a couple. Can somebody pass a microphone on?
Thank you. Are you investing in robotics and AI, and what sort of functionalities, fields, and areas of robotics are you investing in or looking at? Thank you.
We are not. I think we try to stay away as much from, and I think this might be unfortunately for us in the long run, and we may come to regret it. but want to stay away from super capital intensive businesses because our objective is to be able to support our companies through to the point where they may be, masters of their own fate. And in hardware and robotics companies, I think that is just really, really difficult. So I think that's for bigger funds to play, not for us.
Yeah, we do invest in robotics. I'm not responsible for that. I'm very vertical on my team, but we do. And so, if there's any idea opportunities, we'd love to look at them and refer you to the right person.
Yeah, for my fund, typically this year we probably will not invest in robotics at this stage because it's super heavy capitalizations like industry. But I'm not sure about next year because we're kind of new, so we adapt very quick. But I would like to have this early conversations like with these partners in terms of robotic plus AI stuff. And smart like hardware is one of it. Doesn't have to be humanoid robotics, right? But because I actually invest in like computer visions like solutions when I was in Singapore, so I know this industry for a while. But this year we are not heavily invested in like real robotic like humanoid robotics sectors. Yeah.
Next. My question for you is about gender disparity in venture capital. So I interviewed a woman on the podcast who was a venture capitalist, and she would only invest in female-founded firms. Now that is very rare because they only get a teeny tiny percentage of VC money. So I'm curious as to what is your viewpoint? Do you invest in female-founded firms, and what is your experience been?
Yes, we do invest in female-owned companies. We actually, this past year, launched a women's fund specifically to invest in female founders. So that's very intentional in our DNA, and we're hoping to do even more investments. And yeah, it's our very small way of trying to move the needle on sort of the sort of microscopic percentage of funding that's going to female founders.
The company I spoke about that I'm most excited about was female founded, but we have zero mandate about focusing on any diversity for investing. We invest for the best investments, and a lot of them. Thank you. A lot of them end up being really diversely founded, and I think all kinds of diversity are included in that. But the focus is very much still looking for some of the best investments.
Yeah, for my fund, I think we haven't, to be honest, we haven't like seriously talking about like this kind of topics. But I think it's not a problem. Like it doesn't add up any things like when you have female partners or whatever. Because in terms of female partners, my general partner, she's a female in Dubai. It's amazing like woman. Spent 10 years in like great place, very very tough. And so we don't have any like things about this perspective. So.
This is the last one. Hi, thank you for what you do. I'm a founder myself, and I was listening to what you're saying. Earlier, you mentioned about, I think most of you said that you are seed and pre-seed investors. I'm curious to know if you're investing in seed and pre-seed, valuation is hard to determine. And if valuation is one of your thesis elements, how do you manage the evaluation of startups when they're in pre-seed round, when there is no concept of valuation in a concrete sense?
Yeah, I can go first with this question because this question I think is very interesting one now. I think because venture capital history and like startup history has been a while in human history, so we have a lot of data for this one. So one thing objectively we can take is like we will map like the startup, this idea, and the whole matrix into one box. And that box has a range about like valuation. So that would be the first reference I would take. And second is just about like communications. Like as I mentioned, what kind of valuation trying to aim and explain what's the reason behind that. So I would combine these three reasons to decide with the partners together.
Yeah, I don't think I have anything to add. So it's sort of taking into consideration, the team, the market. There's so many other factors in addition to valuation. So yeah, making that judgment based on the other considerations.
I'd say it's a lot.
Yeah.
That's really it.
Awesome. Give it up for the panel, guys. Thank you so much.